All right, welcome to lesson 2, and in this lesson we'll be talking about risk management. Risk management is a segment of money management whereby you consider the amount of money you are willing to expose to risk per time or per trade. If you have, for instance, $100 capital, you must know each time you want to place a trade how many percent of your capital that you are willing to risk per time. So, and that will take me to what we call position sizing. Please follow me. This topic is what determines if your capital will stay with you or not. Because if you did not apply proper risk management, you can lose your capital in a day. Please follow me. Position sizing is simply a calculation that helps you to know the proper lot size to use in proportion to your capital size as well as your tolerable risk. Under position sizing, we are going to be considering three things while calculating the position sizing. One is the percentage of your capital you are willing to risk. Second is your stop loss, and third is what? Lot size. Lot size is the end product of position sizing calculator. First and foremost, let me assume that you are right now trading with 5,000 demo account or real account. My counsel, as I've always been sounding in this school, is that you use 1 to 3%. In fact, when you have a low probability trade, go to the point of using 0.5% or even 0.25. I have used these percentages when the setup I'm trading is of very low probability of giving me a win. But when it is high probability trade, you can go with 1% to 3% risk. Having said that, let me use an uptrend again to demonstrate this. If I am expecting a discount to come all the way down here, and let me assume that now price is here and I want to buy, and then my SL is supposed to be here, my stop loss. The first thing I do is I go back to my money management rule and find out what percentage that I had said that I will be using to trade. If I am going to be exposing 1% or 2%, let me say I'm exposing 2% of my capital determined. And then what is the stop loss? The stop loss simply means this is where I'm buying, the distance between here to here. I will check the pips. They can ask you of the price, but I will check the pips. Let's say the distance from here to here is 50 pips. So I've determined my stop loss in pips. I will keep it aside. Now, having known this, what should be my lot size? Should I make this entry using 0.01 or 0.05 or 0.1 or 0.2 and so on and so forth? Now, what will help me to determine this lot size is what? My position sizing calculator. People do the calculation manually, but why will I go for manual calculation when I have a calculator that can easily do it for me? I will teach you in the school the calculator that will help you to calculate position sizing. What is the implication of this calculation? Let's assume that I had calculated and I discovered that what is 0.5 that I need to use. What is the 2% of my 5,000 capital? 2% of 5,000 is $100. The implication of this is that if I set my SL here and use 0.5, if market comes and hits my SL, what I'm going to have left will be 4,900. That is, my loss will be $100. So my equity reduces to 4,900 or my capital reduces to 4,900. That is the implication. Now, assuming I did not use a stop loss, what will happen? When price goes beyond here, I will be losing more than $100. SL is your insurance. Never ever trade without a stop loss. That is the essence of this calculation. Most people who lose their capital in the financial market, they lose it because they use a big lot. They did not calculate their position sizing. So they used the lot size that immediately market went down against them. All their money is gone. Let me sound this as warning. Never open a trade without calculating your position sizing. Always know the proper lot size and predetermine the percentage of your capital that you are willing to risk per time. Now, there is something that I also want to note. We can have the same 5,000 risking 2%. Now, trader 1 place trade here, trader 2 place trade here. We have the same capital. This is our SL. We are using the same trading rule. You opened here, I opened here, then our SL is both in the same place. When our stop loss is hit, we will still lose the same $100 if we calculated our position sizing. Your losses is not determined by how wide your stop loss is if you calculated your position sizing, because what will happen is that the trader 1, when inserting your stop loss is wider than my own. Your own is to tell the calculator that my stop loss is 100 pips, and this one is to tell the calculator my stop loss is 50 pips, for instance. So what the calculator does is that regardless of what your stop loss is, you have given the calculator a command that I'm only risking 2%, and 2% of 5,000 is $100 for trader 1 and trader 2. Now, the calculator will now give us different lot sizes that when this person use, maybe this person, the calculator will say use 0.25, and the calculator will say here use 0.5. Now, trader 2 is using a bigger lot size than trader 1, but they are risking the same amount, $100, $100. All right, let's move over to the calculator quickly. Now, there are a lot of apps that you can use for calculating your position sizing. Okay, for the sake of this lesson, I'm going to be using FX Book app. Look at this app. Download this app, my FX Book. So I'm going to click on it. All right, when I come to this app, I'm going to be clicking on the menu. You can see by my left, and then you can see calculators. You can see here under the menu calculators. I will click on calculators. Here you can see a lot of calculators. You can use this calculator to calculate your pip value, margin, Fibonacci, risk of return, drawdown, profit. But what we are here to do is to talk about the positions. You can see the first question that you see here is what is your currency pair? I always trade gold, so that is why you will see gold here. I'm always calculating my position sizing each time. You will select the pair that you are trading, whether Bitcoin, anything at all that you are trading, just look it up here. All right, I have my gold there. What is my account currency? My account currency is USD. Remember that while we are registering with a broker, remember we choose between USD, Euro, Naira. So I'm using USD. What is my account size? Your account size, which is here, simply means what is your capital? That is the account size. Let me say that my capital has reduced to 4,350. What do? I will insert 4,350 as my account size. 4,350. Remember that if you make losses, you will no longer be using the same lot size as when you have not made that loss. If my capital reduced from 5,000 to 4,350, I have to come back to the calculator and calculate the proper lot size that I would use. Every single day, I do this calculation depending on my new capital. If I made profit and my capital increased, I'm using the new capital. All right, 4,350. Then I'm being asked, what is my stop loss in pips? I've shown you how to check your pips using Fibonacci and arrow. If you did not get it in the previous classes, then you can wait over the weeks. For this calculation, we are using 50 pips. I will type in my 50 pips. And then I'm being asked here, what is the risk ratio in percent? Remember, I said do not risk more than 1 to 3% of your capital. And sometimes when you have a low probability trade, you are risking just 0.5%. I'm going to be risking 2%. And then what is the trade size type? We are going to be looking at the 3 major lot sizes that we have. I don't know if I've taught that. We have the micro, mini, and the standard lot. We have nano additionally, but most brokers do not use nano lot size anymore. I'm going to be using units. The next thing is, what is my trade size type? We have 2 options. Either you use it in lots or you use it in units. I always use mine in units. 1,000 units. That is for micro lot. We are going to be talking about the 3 major types of lots that we have. We have micro lots, mini lots, standard lots. So I'm going to be using micro lot trade size, which is 1,000. You can always use 1,000, no problem. And I will say, after you have put this 1,000, you say calculate. All right, you see the result of my calculation. The money I'm risking is $87. What this means is that it's telling me that 2%, which is here, of my capital, which is 4,350, is $87. This calculator is trying to say that peradventure my SL is hit, I am going to be losing $87. Am I okay with this? If I am not okay, I will go back here and adjust to 1% or till the amount you can tolerate. Now, what is the unit? It's telling me that what I can buy 174 units using my 2% out of this 1,000 micro units of gold. All right, and then the lot size. Now look at this. The lot size I'm going to be using will be 0.17. So when I go to place my trade, the lot size I will place there will be 0.17. The moment I place that 0.17, the implication is this. Remember, it's 50 pips. It means that when market go, remember we have higher high, higher low, higher high, higher low, higher high. If my SL is here, my entry is here. What this means is, if market goes against me by these 50 pips, I will lose minus 87. If market goes in my direction by 50 pips, every 50 pips that market goes, I will make $87. If market go all the way up to 100 pips, I will make another $87. That is 87 times 2. Whatever thing it gives me, that is 4% of my capital is what I will make. This is the essence of your position sizing, to tell you the proper lot size to use for your trading, so that you will not lose more than you anticipated or more than you can tolerate. You see that what risk management is a very important aspect of trading. Imagine that you placed a trade without SL or without calculating, or maybe imagine that even though I had $4,350 as capital, I now go and use 0.5. You know what will happen? When I use 0.5 without checking my position sizing to know the proper lot size, when market hits my SL, just check this, I'm going to be losing if not up to $1,000 because I did not calculate. You don't just wake up and insert any lot size that you like and use it to trade. No, you have to come and calculate to know the risk, and it gives you peace of mind. When I place my trade and I'm risking 1% or 0.5% of my capital, I don't panic. I just place my trade and go about my business. When I come back, either my SL is hit or my TP is hit. These two are parts of money management, psychology and risk management. Set your rules and be disciplined enough to go by them. Now, something that is enticing that I have to mention is that the bigger the lot size you use, the more money you make. If market goes 50 pips and I'm using 0.5 lot size, I will no longer be making $87 when market goes in my direction by 50 pips. I will be making almost $1,000. Now, this is where greed comes in. You now see why people lose money in the Forex market. People lose money out of greed. Instead of them to use a lot size that they can tolerate if drawdown happens. Drawdown means you lose money. No, they will rather use money and be positive. They will rather use a big lot size and be positive. And then when market goes against them, they are demoralized. You have to discipline yourself enough to make the money in accordance to the risk you can tolerate. You may have to deal with this for some time before you finally learn to be disciplined. But let me warn you ahead of time. If you are doing 1%, stick to 1%. If you are doing 2%, stick to 2%. Don't go and risk more because you did it yesterday and you made 1,000 instead of $87. So you are doing it again today. You are simply a random trader that will soon get depressed because you will lose your capital very soon. But I have told you ahead of time so that you can take caution. Market do not take from you more than you are exposed to risk. You can only give to the market the amount that you expose to the risk if market goes against you. All right. I hope this week's 6 lessons has been helpful. If you are yet to subscribe to this channel, do that right now. Like those videos, ask your questions under the comment section. I will attend to them, and do well to share this with people that you love. All right. See you in week 7.